Autoline Daily is brought to you by Bridgestone, passion for excellence.
It's Wednesday, August 4th, 2010. I'm David Welch, staff writer at Bloomberg Businessweek, taking a turn in the Autoline Daily hot seat for John, who should be back tomorrow. Here's what's going on in the automotive world. Sales numbers are in, and the results are mixed depending on what market you're in. First, let's look at the U.S., where sales improved in July compared to June. According to Bloomberg, the industry sold just over 1 million units last month, which is 6.6% higher than June. That number brings July's SAAR to 11.98 million. Now over to Europe, where things aren't going as well. According to agency France Presse, sales plunged 30% in Germany last month, with new vehicle registrations totaling only 240,000 units. Also, new car sales were down by a quarter in Italy and Spain, and off 13% in France. And as we've been reporting, new car sales in China are starting to slow down too. According to Gasgoo, sales were down 7% in July compared to June, with a total of 1.1 million vehicles sold. Last week, when GM announced the pricing of the Chevy Volt, the company also revealed that the engine in the vehicle is calibrated to run on premium-grade gasoline. Now, Autoblog has learned that the company's extended-range plug-in can also run on cheaper regular fuel thanks to the help of a NOx sensor, which adjusts the spark timing to avoid engine damage. Volkswagen is getting ready to start producing vehicles at its new plant in Chattanooga, Tennessee. And Wards reports that the automaker is looking into the possibility of building Audis at the facility as well. But a company spokesman stressed that no decisions on the matter have yet been made. Another big maybe is whether VW will manufacture engines in the U.S. According to Wards, the company intends to make a decision by the end of this year. As production of its new mid-size sedan ramps up in Tennessee, it will import engines from Germany. Now some news on the EV front. General Motors said it will invest, through its GM Ventures subsidiary, $5 million in Bright Automotive, which is a startup car maker based in Indiana. The money will help get production rolling of a new plug-in hybrid van called the Idea. Think of it as an electric version of the Transit Connect sold by Ford. It's designed especially for telecom and utility companies or other organizations with big fleets of trucks. The company is shooting for an electric-only range of 40 miles and a 300-mile range on gasoline power. Look for the Idea to possibly debut in 2014 with a price tag of $41,000 before the federal EV tax credit. The investment from GM could help legitimize Bright, possibly encourage more private investment, or even allowing it to get loans from the U.S. Department of Energy. Speaking of startups, France's Citroen is planning to introduce a new sub-brand. According to Wards, the French automaker will unveil its yet unnamed division at next month's Paris Auto Show. Citroen is targeting what it calls the iPod generation, and it's looking to define the lineup with clever design and simplicity, not price. The styling of its vehicles is said to be based off the Sea Cactus concept from 2007. Coming up next, some of my thoughts on the politics behind the auto bailout. We'll be right back after this.
Introducing Bridgestone's third generation of run-flat tires with groundbreaking new Bridgestone technologies. Bridgestone run-flat tires offer improved ride comfort, lower rolling resistance, and improved wear while giving you the peace of mind and comfort you need.
You can tell it's campaign season. President Obama was in town last week touting the success of the auto bailout. Among his claims, the president said that the economy would have lost more than 1 million jobs had GM and Chrysler failed. Sure enough, his political opponents, namely California Congressman Darrell Issa, came out and charged that the president didn't really create jobs. The industry isn't employing many more than it did before the bailout money was invested and GM and Chrysler went into bankruptcy. This is all hot air from both sides. First, the Obama administration is a little early in declaring victory. GM is certainly getting traction, having posted a profit in the first quarter, and Chrysler is close to breaking even, but both companies are losing market share. There are signs that GM is winning some new buyers, but Chrysler's prospects are still very difficult to gauge. And until we know how much it cost the taxpayers to save Detroit in the end, measuring the success of the bailout is nearly impossible to do. That's not to say I agree with Issa. The auto industry has added back 55,000 of the 334,000 jobs it lost during the crisis. But had GM or Chrysler slipped into liquidation, job losses would have been much greater. To really measure the bailout, we need to see how much of the $60 billion invested in GM and Chrysler is going to be returned. It needs to be worth at least $66 billion and possibly as much as $80 billion for the government to break even on its GM investment. Since those bonds aren't as liquid as a stock, analysts say GM's value should be higher than $53 billion when GM has its initial public offering and a stock eventually trades. If the feds break even, we'll know it was a good deal. And even if they don't, it might end up being a decent investment. Say the government recovers 80% of the money. Would $12 billion be a good price for saving two major automakers? During the depth of last year's crisis, I think plenty of today's critics would have taken that deal, even today. And that'll do it for today's show. But before I sign off, I want to remind you to tune in to Autoline After Hours tomorrow night at 7 p.m. Eastern on our website, AutolineDetroit.tv. Unfortunately, I won't be there. You're getting your weekly dose of David Welch a day early, but our special guest will be Tom Kowaleski, the Vice President of Corporate Communications at BMW. Should be a good show. Again, I'm David Welch with Bloomberg Business Week. Thanks for watching. John should be back in the anchor chair tomorrow.